Hello, Sec 5 students. Welcome back to school. I'm not in school today, but it doesn't mean that you can't continue to learn. So I have prepared some videos as well as some worksheets for you to do. Now, before your mid-year exams, you had actually done incomplete records and you had done the capital comparison method. Now you will realize in your topical practices, there are also some incomplete records, capital comparison methods questions for you to try. Today, we will be doing the second part. We will be doing what you see highlighted on your screen now, the analysis of records methods. Alright, now whenever you see these blue fonts, what I'm highlighting now, whenever you see these blue fonts, please pause the video and take as much time as you need to copy down whatever is on your screen. Alright, so I repeat again, this is a video, so you can pause and replay as many times as you need. Alright, without further ado, I'm going to start and we will be looking at items that can be derived using the analysis of records methods. Now, if you vaguely remember, the incomplete records chapter, right, basically focuses on when the business does not keep proper records of accounting. That means they don't keep double entry recording. Perhaps they only record all the cash transactions or the cash and bank transactions and they don't record much else. So in the incomplete records methods, we are actually trying to find out, you're like a detective, right? You're trying to find out what are the numbers, what are the items in the balance sheet as well as in the income statement. Now, the analysis of records methods mainly helps you to derive the income statement items. Alright, income statement items. Now, in this table, what you can see is the income statement items. So later on, you will be copying down the income statement items, and I will just give you a brief introduction of how or where you can find these income statement items. Okay, so let's start. The first three income statement items, alright, sales revenue, inventory purchase, and cost of sales. These three items, where does it come from? It actually comes from your cash in hand, cash at bank, as well as your control accounts. So today we are going to be focusing on these three items, alright? And we will look at the cash in hand, cash at bank. We will be preparing a lot of control accounts, alright? Now, apart from that, right, what are the income statement items are there? Right, you will also be you also be deriving other income earned in the next lesson, and that is mainly from your balance day adjustment, income receivables, income received in advance. You will also be deriving expenses incurred. Again, this is balance day adjustment, accrued expense account, and prepaid expense accounts. Now, the last item in the income statement is your depreciation expenses. Now, depreciation expenses can be derived when you analyze the changes in the net book value. Alright, so for today, we are focusing on these three: sales revenue, inventory purchase, and cost of sales. And you will also realize that we will be focusing a lot on control accounts. Why do we focus a lot on control accounts? Basically because when we look at sales revenue and inventory purchase, right, you actually realize that the trade receivables and trade payables control accounts does show these two items. The trade receivable account does show the sales revenue account, and the trade payables control account does show the inventory purchase account. So if you need to derive the sales revenue, you can look through trade receivables, and if you need to derive the inventory purchase, you can look to the trade payables. Alright, so let's take a look at deriving sales revenue. Basically, sales revenue comes from two main sources, right? It comes from either cash sales, which means either cash in hand or a check is given to you the moment you make that sale, or credit sale, where your customer takes the goods first and pays you back later. Alright, for cash sales, it's not very difficult. Typically, what ledger do you look at? You look at your cash in hand or your cash at bank ledger, or your accounts line, in other words. Sometimes you also look at bank statements or you look at receipts, right? So cash sales is quite straightforward. Usually the number will be there. Now credit sales can be quite challenging. So where do we derive this number from? Now credit sales, basically what happens is that you sell your goods to your customer. Your customer hasn't paid you yet. So when you sell your goods to your customer and your customer haven't paid you that, what account is that? Yep, you are right. It is the trade receivables. Oops, wrong spelling. Alright, it's the trade receivables control account. So when we need to find out credit sales, typically we will prepare the trade receivables control accounts. Alright. Again, let me remind you, this is a video, so you can pause anytime you feel like it. Let's take a look at example 1. Alright, example 1, Jollibee Trading had the following information. Now, forgot to mention to you, for the entire set of notes, example 1, example 2, example 3, later on when you do the practices, right, they are actually all linked to each other because incomplete records tend to be one huge question, but I cannot teach you the huge question at one go, so I need to break it down into small parts. So example 1, example 2, example 3 is linked together, and example 1 is currently teaching you how to derive sales revenue. Okay, so let's take a look at example 1. Jollibee had the following information. 1st of January, there's a trade receivable balance, so this is your beginning balance. Alright, so maybe I just type here. This is my beginning balance. And 30th of June, which is my ending balance. Hey, Miss Lim, how come it's not 1 year? Yeah, it's true. Sometimes a business may need to prepare for 6 months, for 9 months, but more often than not, it's for a year. So for this particular question, it's just so happened that it's only for the 6 months. Alright, so they had the following information, the beginning balance on 1st of Jan and the ending balance on 30th of June, only 6 months. So what additional information did they tell you? They tell you that the sales returns from credit customer amounts to 2,500. Your customer return you 2,005. Check payment from credit customer is 22,500. And this is after you give a cash discount of $600. They also tell you trade receivables amounting to $2,000 was written off. And the last piece of information, cash sales amounted to $6,000. Alright? So the first piece of information that they want you to do is that they want you to write down the formula to calculate net sales revenue. Right, so if you remember your income statement, how do you calculate your net sales revenue? Maybe I'll let you think a little bit for 5 seconds. Looking at your income statement, how do you calculate your net sales revenue? Yeah, you're right. Your income statement actually tells you that your net sales revenue equals to your sales revenue minus sales returns. Right? Except that for this topic, you need to remember that sales revenue can be broken down into credit sales as well as cash sales. Alright? So, what we need to do is look at the next question now. So, the next question asks us to calculate the net sales revenue for this period. Alright, so calculate the net sales revenue. So, I need to find the numbers for all of these, for credit sales, cash sales, and sales returns. So, firstly, cash sales. Alright? Actually, sales, you have the number, right? It's $6,000. Right? So that is quite a straightforward number. You actually have a cash sales, which is $6,000. Alright? So good job. It's like 1 mark already. The next step, you are done with cash sales, but you still have credit sales. Oh, you also have sales return, but let's focus on sales first, okay? So now you want to look at credit sales. So for credit sales, like what I mentioned to you earlier, when we look at credit sales, right, we want to look at the trade receivables control account. So now that we are looking at credit sales, we want to prepare the trade receivables control accounts using whatever information that is provided. Now, if you read through the information, you can prepare the trade receivables control accounts. But you realize that you don't have the credit sales number. Alright? Question mark, question mark, question mark. Where is the credit sales number? It is not given to you. So that is the reason why you are preparing the trade receivables control account, because you need to use the trade receivable control account and work the sales revenue out. You have to work out what is the value of sales revenue, because that is the missing item, the item that is not shown at all in your question. Don't believe? You read through one more time. You have opening balances, closing balances, you have sales returns, you have paid check payments from credit customer after a cash discount, you have a trade receivables that is written off, you have cash sales, but you have no credit sales. Therefore, your sales revenue is actually the missing item. So we're going to prepare our trade receivables control account to work backwards to find out what is our sales revenue. So let's take a look at the first method, which is, in order for me to find out what is my credit sales, I need to prepare the trade receivables control account. Alright, so using the information in the question, you need to complete this trade receivables control account based on whatever you know. So let's start first. The first piece of information that you know is that there is a beginning balance of $10,000, right? So that is exactly your first piece of information. On 2003, you have a first piece of information. You have a beginning balance, right? So you will write the date down, 1st of January. Now you see this information column. This information column is only for practice. I just wanted to write down here exactly where to get the information from. Okay, so in a normal question, you won't see this information column. Alright, so what is this information? This is the beginning balance in the question. So balance brought down amount is $10,000. Next piece of information, what do you have in your question? The next piece of information that you have is that you saw here, there is a sales returns from credit customer. Alright, so when there's a sales returns from credit customer, right, what is the accounts that are affected? So usually you will record trade receivable minus, right? Because now that your customer has given you back some inventory, they actually don't need to pay you so much. So trade receivables minus the other account affected is sales returns plus. Alright, and since we are preparing the trade receivables control account, we are going to record this trade receivable minus how much? Trade receivable have to minus $2,500. So in my trade receivables control account on 30th of June, I will record trade receivables control account minus 2005. Why? The other account affected is sales returns. Where did this information come from? This is actually part I of your question. Additional information I in your question. Alright, now moving on, we also see here that there was a check payment from your credit customer. Alright, your check payment from a credit customer amounting to 2250. Alright, so when there is a check payment from credit customer, what is the double entry that is going to be recorded? Firstly, what we record is bank increase, right? Definitely, because there's a check payment. So the moment we see check, we know that it's bank. Now, who paid you? Your credit customer paid you. Since your credit customer paid you, that is your trade receivables. Now, when your credit customer pays you, do they owe you more money or less money? That's right. They owe you lesser money. That's why we are going to record trade receivable minus. So that's what we're going to do now. We're going to record trade receivables minus 22500. Why? Because they have paid you a check which you have deposited in your bank account. Alright, so in our trade receivables control account, we will record something like this, where your trade receivables reduced by 22500, and the other account affected is cash at bank. Again, where did this information come from? It came from additional question 2. Alright, now there's actually more information given in that same part 2. They also tell you that a cash discount of $600 was given. Now this cash discount, when you give a cash discount to your credit customer, is it a discount allowed or discount received? Yes, it's a discount allowed. You gave them a discount, right? You gave your customer, you allow your customer to have a discount. So you will record discount allowed plus. Now when you give a discount to your customer, does your customer need to pay you the amount? Nope. Your customer don't have to pay you the amount because you gave him a discount. He actually needs to pay you lesser. So really, trade discount has reduced. So how do we record this in the trade receivables control account? We will be recording trade receivables minus how much? Minus $600 because there was a discount allowed. And we are going to record this inside your trade receivables control account as such. Trade receivables control account reduced by $600. What is the other account affected? Discount allowed is affected. And of course, where did this information come from? It came from additional information II in your question. I hope you are still understanding this well so far. If you don't understand well, you might want to pause and replay. Otherwise, I will continue. Alright, we're nearly there. The next piece of information, part 3, you see that there is a trade receivables that is written off. So when a trade receivable is written off, what is the double entry? Now why this trade receivable written off? Maybe the debtor die, run away, bankrupt, the business collapse. Since that is the case, you are never going to get this money back again from him. Since you are never going to get the money back again from him, we are going to record this as trade receivables minus because he's not going to pay you back the money already. So since this amount is written off, what is the other account affected? Not impairment. A lot of you would love to answer impairment. The other account affected is allowance for impairment of trade receivables. Aiyo, so long. I'm going to write it as a short form, okay? So allowance for impairment of trade receivables. Let me see whether I can, yeah. Okay, so allowance for impairment of trade receivables will go down. Right? So how do we record this in the trade receivables control accounts? We will record trade receivables go down. Go down by how much? Go down by $2,000. The other account affected is allowance for impairment. So I'm going to show you how it's recorded in your trade receivables ledger account. It will be recorded like this. And you might need more than one line because the allowance is a very long account. We record trade receivables reduced by $2,000. What is the other account affected? Allowance for impairment of trade receivables. And the information came from where? Came from additional information part 3, part I. Everyone okay? Alright, let's continue. Anything else? The last item that's given to you is cash sales amounting to $6,000. Oops, cash sales is not recorded in trade receivables. Why? Because cash sales means that you have already received the payment. So when there's a cash sale, usually the double entry will be bank increase, sales revenue also increase. So it is not recorded in the trade receivable account. Do not go and record cash sales in your trade receivable account. Alright? Now, is that all? Is that all we have, all the items that we have in our trade receivable account? Actually, yeah, this is all the items that we have inside this additional information. But remember just now what we talked about? That when we are preparing the trade receivable control accounts, right? Actually, there should be a sales revenue inside. But this sales revenue is a question mark. I don't know what is this sales revenue amount. So we are going to use the trade receivables control account to calculate this sales revenue. But how do I do that? Alright, so how do I do that? Actually, there's one more piece of information I need to record, and this is the ending balance. You see that the ending balance is 15,500. Alright, so I'm going to highlight the ending balance in green now, 15,500. How do I record this ending balance inside the trade receivables control account? Now, ending balance means the final balance at the end of the day, right? So we're going to probably leave a line. This is going to be our sales revenue, right? It's just going to leave a line. Now, this is how we are going to record our ending balance. Now, ending balance is going to be 17,600. Is it 17,600? No, leh. Ending balance is $15,550. So that's what we are going to record. $15,550. Alright? So, ending balance, how do I tell people that this is the ending balance? Typically, I tell people that this is the ending balance by writing balance brought down. And this is my ending balance, right? So ending balance brought down are usually on what date? The ending balance usually brought down usually on the 1st of July. Alright, so you take a look at this trade receivables control account now. You see you have a 17,600 up to, oops, is it 17,600? Yes. Of course, throughout the entire thing, right, you have been calculating your balances. Then you realize that your balance from $10,000 actually went negative to 17,600. Don't be too shocked, okay? It's normal. Alright, after you calculate your balance, you realize that after your last transaction, your balance is 17,600 credit. But somehow this credit amount became a debit amount for ending balance. So what is the item that caused the credit amount to become a debit amount? The only item that will cause your trade receivables to increase, that is your sales revenue. Alright, so this is your sales revenue, and this is the amount that you have for credit sales. your sales revenue is causing your $17,600 credit to become $15,500 debit. You made some sales, that's why your trade receivables has increased. So if you made some sales and your trade receivables has increased, right? How much is this going to increase by? Any idea? How do I find? Oh, by the way, let's fill in the dates first, okay? Okay, so how do I find this credit sales here? I don't know what is this credit sales, How am I going to find it here? So let's take a look here. You see, you actually ended up with your after recording the first few transactions, your balance is 17,600 credit, right? And you somehow ended up as $15,500 debit. It means that you probably took 17,600 credit, which is a negative amount. You added your sales revenue here. Alright, you added your sales revenue inside the debit column, and it helped the number to become $15,500. So how does this work? It actually works like this, right? A negative 17,600 plus an unknown amount, alright, an unknown credit sales amount, and this became $15,500, a debit balance, a positive balance. So this is all just mathematical. We need to work out what is the credit sales value now. Alright, so how do I work out what is the credit sales value? So now my credit sales value, I just need to bring the $17,000 over to the other side, right? I just need to bring the 17,000 over to the other side. 15,500 plus 17,500, and I can find out that my credit sales is $33,100. Credit sales is going to be in the debit column, $33,100. So if I take my calculator and I do my maths, I will see that 17,600 plus 33,100 equals to 155,500. Everybody okay? You should be. Let's do a quick check. Yes, correct. Alright? So with this, right, we managed to find our credit sales, and our credit sales is $33,100. Okay? Not okay? It's alright. Go back and replay the question again. Okay? Alright. Next thing. So actually that's not the end of the question, although we are very tempted to say, oh, that's the end of the question. No, actually the question asks you to calculate the net sales revenue. Alright, net sales revenue, which is credit sales plus cash sales minus sales return. But now we have done the difficult part of calculating our credit sales. The rest is easy peasy because you're just taking numbers from the question here. Alright, so how do I calculate my net sales revenue? I just need to take my cash sales plus my credit sales minus away my sales returns. And if I were to substitute the numbers inside, my cash sales is $6,000 from my question. My credit sales is here, right? Here, credit sales. And my sales return is again from the question. And I can calculate that my net sales revenue is 36600. So you can pause and write this down, and then after that you can try to do practice 1 on page 9. You can do this now. or you can do it at the end of this section, okay? Alright, so what you have just learned is to the first method, to prepare the trade receivables control accounts so that you can prepare the sales revenue. Now, actually, you can do this question in a completely different way, and that is method 2. Alright, method 2 is a little bit faster because you do not have to prepare the trade receivables control account, but you just need to calculate. But method 2 is very high risk because when you calculate, sometimes you calculate wrongly. And if I cannot see your method, or if you write your method wrongly in the first place, then your entire question will get 0 marks. So you want to use method 2, please be very careful. So method 2 will help you to get exactly the same answer, except that you don't have to prepare the control accounts. All you need to do is to calculate. Use your write down the working, use your calculator and calculate. But in order to do that, although you don't need to prepare control account, you still need to recall the trade receivables control account. What do you need to recall? You need to look at this, right? And you need to look at this, and you need to recall how you manage to calculate this sales revenue. So basically, right, you need to recall, you need to be able to imagine this trade receivables control account in your head. Alright, so the purpose of this trade receivables control account is that you need to find out what is the ending balance, right? You need to find out what is the ending balance on 1st of July. So when you use method 2, you need to think to yourself, what is my objective? My objective is that I want to find my ending balance. Okay, so if I want to find my ending balance, what do I start off with? I start off with my balance brought down, right? So your calculation does the same. It starts off with your beginning balance. Alright, after your beginning balance, what is in? After your beginning balance, you can see that your trade receivable control account minus away your sales returns. So beginning balance, you need to minus away sales returns. Oops, sorry. Before that, I just put plus credit sales first. Okay, you add your credit sales. Then you minus away your sales returns, right? So I'm imagining my control account. After I minus away my sales returns, what else do I do to find my ending balance? Correct. What I need to do next is that I need to see whether there's any payment. Alright, payment by your customer. And if there's a payment by your customer, you need to deduct that away. And the last another item, you have to minus away the discount allowed, because if you gave your customer any discount, it will actually cause the ending balance to reduce. That's why you minus discount allowed. The next item you will have to record is that you have to record the trade receivables that's written off. Right? Why? Oh, take a look here. Your trade receivable control account, right? You actually minus away the trade receivables that was written off. So if you don't want to prepare this trade receivable control account, it's okay. You just need to remember how to prepare it, and you write it out in the form of like a working. Alright, so you don't prepare the ledger, is okay, but you need to write out your working, how to uh, get the ending balance, right? Alright, so after you write this down, right, you realize that, oh, I need to find out credit sales. Okay, I don't know what is this credit sales, right? So this is my unknown. That's why there's a 2 question mark there. Okay, and after that, you're going to substitute all your numbers in, right? So I substitute all my numbers in. So ending balance, I put in the correct number. Beginning balance, I also put in the correct number. Credit sales, I don't know, so I leave it as a question mark, question mark. My sales return, I put in the number. Payment by customer, I put in my number. Discount I put in my number. Trade receivables written off, I put in my number. Alright? And then basically it's an algebra question problem. You are going to find the unknown, and the unknown is your credit sales. Right? Unknown is credit sales. After you rearrange the formula a little bit, you find out your credit sales is 33,100, which is actually the same, exactly the same answer if you prepare a ledger. So you can see method 2 is really much easier. You don't have to prepare a ledger, but it requires you to transfer whatever you remember into the ledger into a written formula, a written working. Alright? But again, we remember that's not the end of the question. It's only halfway there. The question actually want you to find out what is the net sales revenue. Right? So net sales revenue is cash sales plus credit sales minus sales return. Again, we substitute the credit sales in and you will get exactly the same answer. Alright, it's exactly the same answer as if you had prepared a control account. Okay, so what you have done now is you have looked at deriving sales revenue. You have learned two ways to derive the sales revenue. One way is to prepare a control account. The second way is to just calculate by writing out a working. So what you need to do now is that you need to go to page number, here you go, page number 9 to 11, alright, and you can do practice 1 and 2. Alright, you can do practice 1 and 2 from page 9 to page 11. There's space for you to do it on your notes. After you finish doing it, you should submit it into the Google Classroom. All at the same time. Practices 1 to 5, everything all submit into the same Google Classroom. Okay? You can pause here and do your practice 1 and 2 now. See you in the next video. Bye bye.